managed about 100. I managed about 100 audits a year. And of those 100 audits, 98 of them were probably nonprofits. So small, medium, large, anywhere in between, from just a normal everyday audit of a nonprofit organization to large, like back then they were called A133 audits. Now they're called UG audits or single audits. If you have over $750,000 in expenses of federal funds, you're forced into this type of audit. But now I've broken away from kind of public accounting, and I do outsourced accounting and CFO services for small and medium-sized nonprofits. So anything from helping with a monthly close, kind of stepping in as that controller piece for 10 hours a month to help you close your books and make sure everything is correct, to running an accounting department for a nonprofit or a small business, helping with compliance and reporting, helping with audit prep. So really anything in between. And I've really been working lately in the mental health and addiction space. So I provide services for a couple of HJRA's members. And that's how I actually got connected with Tara and them, and through another consultant that helps HJRA. And so, but I really want, if anybody has questions during this, I slant towards accounting just because that's my background. But oftentimes, like, compliance and program management and accounting all kind of intersect together. So I have a little bit of experience in all of that, from program management to compliance, from the narrative side to the accounting side, we can go through all that stuff. So, but I really wanted to focus on grant management because I think, it's great to get a grant. And I think what I'm trying to present today is kind of best practices. And I'm trying to provide a kind of a cradle to grave, or from start to finish, kind of how to manage these grants. So what are the kind of the important parts of grant management? I think, as far as like, as much of an outline as I can give. So what are the different types of grants that you'll normally receive? I'm trying to put everything in plain English. So if there's any accountants in the house and it's not the accounting speak, forgive me. I'm trying to make it as digestible for everybody. And we don't need to use big fancy words to describe most of this, but I wanted to talk about the different types of or flavors of grants that you get. And then kind of the grant application, why budgets are so important when you're creating these, and then setting up the accounting system for success. So trying to manage those grants. Often you're asked for not just a narrative report for your grants, but you're also providing financial information that's needed out of the accounting system. So what's the easiest way to do that? We talk a little bit about allocation of expenses because I think it's a good kind of piece to touch on. A lot of times when I was an auditor, or even as a consultant now, I see where a lot of nonprofits get tripped up in the allocation of expenses and how to know whether or not you're in compliance for that stuff. And then how do you make grant reporting easier on yourself and your organization? And really, it's not just grant reporting, but reporting back to your program managers with their how close they are to their budget, how to run up spending to the limit of the grant, so you're not underspending or overspending on your grant. We'll talk about that. And then what other compliance pieces should you be thinking about in grant management? So we'll start. Oh, and if anybody has questions during this, please raise your hand. I got Kyle on the lookout. We don't have to wait till the end to answer questions. If any of this sounds like I'm speaking a different language or something, raise your hand, or we can go through it as they come up.
Will you be sharing these slides, or can
most definitely. I can send these over to Tara when we're done, and you can have at it. So these are open.
Great. It sounds like they'll be really helpful.
Okay. So there's kind of three flavors, I guess. Like, I think of grants in kind of three flavors. So the first flavor is like what people think of as a traditional grant, and these are usually, in the past, these are usually from private foundations or public foundations that would give these. So this is money up front that you're given, or money, kind of in large chunks that are to support a specific project or support your mission over a period of time. Now, OHA grants, if we're talking about over the last year and a half and during pandemic and post-pandemic, the grants that have been coming out from a lot of state and local governments have actually kind of mimicked this foundation grant, where they say, hey, we like your idea, you have a nice budget, here's some money to accomplish that, and off you go. So it can sometimes support general operations or expanding operations. In the past, it was pretty rare, but recently they've been a little bit more in vogue for, like I know of an organization that got an OHA burn money that has part of their administrative costs covered for a year or two to administer this stuff. So it never hurts to ask in your grant applications if part of your administrative costs could be incurred. We'll talk about that some more. The other one is the more traditional kind of governmental, state or local municipality grants. And there's two kind of flavors to these. So this is usually like federal government usually issues what's known as these reimbursement grants. And the reimbursement grants is exactly what it sounds like. The nonprofit puts out money first. And then they have to pony up the money for, usually it's a month's worth of expenses. Then at the end of that month, you kind of tabulate what your expenses were and you submit for reimbursement. The other one that sounds kind of like a reimbursement grant is a fee for service arrangement. So if you contract to say, do peer outreach every month and you want to charge, I don't know, Washington County, $2,000 a month to do that, and you're going to have 3 peer support specialists go out in the community and provide outreach. And you do that regardless if they work 100 hours or 2 hours, you charge the county $2,000 a month to facilitate that. That's much like a fee for service arrangement. So the grant documents, I think the different types of grants, depending on which one or what flavor it falls into, sometimes they can seem like they blend together. So really understanding the grant document itself and understanding what type of grant you've got really then depends on how the accounting treatment is put into the accounting system. So with foundation grants, you recognize the full amount of the grant award when you're notified that you won the award. So even though money hasn't showed up in your bank account yet, you would put into accounts receivable what that full amount of the award is, unless there's a condition that would prevent a future payment. So usually like conditions are like matching funds would be a big one. Like, we'll give you this money, but you need to find another community partner that will give you in-kind donations of tenths of $5,000, or you need to come up with other funding than what we're giving you. So basically what they're asking in a conditional grant is that that the nonprofit shares some of the burden with the granting organization. So find some other funds to help support this. In which case you would only recognize the amounts up until the condition has been met. But so with the other ones, it's more of kind of a straightforward treatment. So the fee for service arrangement, you'd recognize the revenues once the services have been completed or on the schedule. So we talked about like monthly, that peer support specialist going out to engage with the community. You would recognize that at the first of every month because you're billing for that fee for service arrangement with your county provider. The reimbursable grants, you would recognize the revenue once the period has passed and the expenditures have been made. What that means is, the month finishes up, you bill them, let's use August as an example. You go through August, you've paid the payroll, you've gotten all the supplies, you have your tabulation for August. You would date recognize your revenue at the end of that month at 8/31. So you would date your accounts receivable and your invoice to them at that date so that the revenue and expenses line up in the same month. You're really trying to get your revenue and expenses to match effort, I guess, is the best way to talk about it, especially in reimbursement grants, because at the end of the day, with reimbursement grants, it's a zero-sum game. As much money as you spent, that's what you get back in revenue. So having an accounting system set up where you can review that is really what we're looking at doing. Expenses are always recognized when they're incurred. That's an accounting term, but essentially what it means is when you're notified or when you're made aware that an expense is coming up or there, like you're presented with an invoice, even though you haven't paid the invoice yet, you would recognize that revenue when it's incurred, when you receive that invoice. Of course, it's easy if you're paying cash or putting something on a credit card. I mean, it's incurred and paid at the same time. So it's only when you're receiving like a vendor invoice that you would have some kind of time lag in between when you would actually put the expense into the accounting system versus when it gets paid.
I'm sorry to interrupt, but we've got a number of people I think that are very new to accounting. Can you just explain what recognizing the revenue and expenses mean? I don't know if that's a new term for folks.
So when I talk about recognizing revenue, I literally mean putting it into the accounting system as money coming in, like you would. So it's either like you literally got a check in the mail and you're depositing it into your bank account. You're recording it into the accounting system is recognizing revenue. In the example that I gave for the foundation grant, where you receive the grant notification, and then you're booking an accounts receivable, you are then booking that accounts receivable as soon as you're notified of the award. If that makes sense.
Shanti has a question as well.
There we go.
So just on the last sentence you said, so we bring it into the system, maybe to a deferred revenue account, but then we don't recognize the expense until that's happened. Or can we?
That's right. We'll talk about later about kind of like, you're absolutely right? Like if say you get like a $500,000 grant and you're made aware of it tomorrow, it is weird that you're recognizing the revenue all at once. Let's say that $500,000 grant goes for like 2 years.
Right.
The way that GAAP is written, the way that like the accounting rules are written, you recognize all of that revenue. All of that, revenue gets put on your books at one time. And there's other mechanisms that are used in nonprofit accounting to track it, but you're absolutely right. It's totally counterintuitive to the fact that like, hey, wait a minute, we want revenue and expenses to match, like in the reimbursement grant. But here you are in a situation where all of a sudden you're booking $500,000 into your accounting system, but you have to spend that $500,000 in expenses over the next 2 years. It is wonky, and we'll kind of address that later on in the presentation. But yeah, it is out of whack, so to say, and when we're recording revenue in that way. Does that answer your question, Shanti?
Yeah, I just wanted to make sure,
Sure.
we needed to wait. Otherwise, we could just recognize that whole,
Right.
4 million. But
yeah, and so
with the expense.
Yeah, and I want to make it clear too, like later on in the presentation, I actually argue that you should not follow the accounting rules. I mean, in this one instance, in the very instance we're talking about right now. And doing so, if you have an audit or you need to report on a GAAP basis, the way that I kind of present it later on, there's an easy way to switch it back into GAAP, compliant, or to accounting. Your accounting rules are correct. But from like a cash management standpoint and reporting to a board or reporting to like program managers about how much money they have left, the way that I'm arguing that you should probably use to track that is it's easier to present it to them, and where revenues do match with the expenses.
Right.
And so it's not so, oh my gosh, we have so much money. Well, you forget we have 2 years to use that $500,000. So
Right.
I'll talk really quick about grant applications. I really want to highlight that it's much more like cultivating donations than it is like just filling out a checklist. Don't ever fall for these like, hey, if you pay us, $2,500, we'll give you a list of grants that you can apply for. You shouldn't be paying for, you shouldn't be paying for grant applications. Essentially, their grants are issued just like donations by people, and a relationship can very much help facilitate grant applications. It can be very time consuming to put these things together. If anybody in the audience has ever put together a grant application, you understand that it should involve planning on the part of the nonprofit. And I really feel strongly that it should be like a cross-discipline exercise. The times that I've found it very difficult, or nonprofits that I've worked at that have had a difficult time managing their grants, usually have this application process siloed with one person or one department. And there's not the cross-pollination of ideas and the cross-pollination of wants and needs for that project. So I believe strongly that essentially everybody that will be involved with the delivery of the grant needs to be involved. The finance department, of course, needs to be involved with it, but you might even rope in executive directors sometimes, like HR, to make sure that you have proper staffing to be able to do this. So, realistically, you want as much transparency throughout the organization as possible through these grant applications. When it's siloed or when it's kind of left to one person to do like the management of it or the application of it, especially in a small organization, it can be very difficult to pick up the pieces if that person leaves, or to understand what's going on with the grant if people that are managing them or reporting on them or having to do the accounting behind them are not made aware of what's happening until it's too late or too far down in the process. So yeah, I'm a big believer in the cross-discipline or cross-departmental, coming together to make sure that these applications are going in correctly. Grant budgets. So I don't want to harp too much on this, but I think it's a really important part of the grant process. If you get the grant budget right and it syncs with your accounting system, then it makes it much easier to manage once it's done. So essentially, a grant budget will dictate how the funds are intended to be spent, literally by line item of the accounting system. So it needs to match, I can't stress this enough, it should match the accounting general ledger. If you're asked for just a summary budget by your grantor, ensure that you have a longer budget or an expanded budget that maps to the smaller summary budget. And what that does is, and we'll get into it later, but it makes reporting and kind of seeing where a grant is along the spending line much easier if it matches your accounting general ledger. If it doesn't, the back end of your accounting department is going to spend a lot of time manipulating and massaging numbers to get it into a budget to actual. So making sure that your budget template or your budget that you're submitting for a grant matches your accounting system's general ledger or expense accounts to a T, so that it's a very easy cut and paste kind of thing when you go to report on it. So again, I hit the point again that I think, it needs to include program delivery staff, not just directors. I use program directors here, but program delivery staff really needs to be involved with this. Does a couple things. Make sure that the person putting together these grant budgets isn't missing expenses, and it really empowers the staff that's going to be delivering these programs and grants to be able to feel included in it, and that they've made their voice heard, and how money is going to be spent and what resources they need to deliver these programs. So nobody knows better than the people that are delivering the services on what's needed. And so again, this cross-discipline of making sure that they're heard and that their wants and needs are being then proposed in the budget, and you're not hamstringing them with shortfalls in the budget that they can't perform or they can't deliver the services here. So and the last thing is, there's a part of overhead usually that's allowed. So there's administrative expenses that have nothing to do with the delivery of programs. I mean, they have a lot to do with the running of the nonprofit so that you can deliver the program, but they're not directly related to expenses around a certain program or a grant. They're administrative in function. So ask for some reimbursement for that. 10% is, they usually, if you just ask for 10%, they'll give it to you. It never hurts to ask for more if you can show that the need is more. But generally you'll get 10%. That's kind of rule of thumb. It's what's allowed in federal grants. So local, state, and counties will allow you usually the 10%. I mean, I've seen them push back sometimes and ask for 8. And if you really want to do the project, you can. 10% is kind of like the like, I don't know, the industry standard, I guess you could say. So thinking about budgets, I have an example here of like a budget summary. I tried to include like this is kind of a fictitious nonprofit, but it kind of shows what a summary budget should look like, or what a summary budget could look like, where it has essentially the federal portion of funding, non-federal, which would be kind of like a match that you would need to come up with of 25,000, and then the total budget for this, and then it breaks it down in very large swaths on what the money will be spent on, and showing that there's no essential income gained from this. So it's much more like a cost reimbursement kind of grant in that sense. This being a summary budget, you need to have an expanded budget that would match this. I can't imagine that everybody is tracking their personnel in just one line item. In the accounting system, usually personnel is made up of like payroll taxes, wages, health insurance, retirement contributions, all of that. Travel is never just travel. Do you have company vehicle costs? Do you have mileage reimbursement? Are you repairing like a company vehicle? So equipment, of course, is like probably computer and technology. If you're doing like, I worked with organizations before that had to administer drug tests to remain in the program. Is this, are these supplies broken down in further detail in the accounting system? So if you have a summary budget like this, I always argue that you need an expanded budget that matches exactly what the accounting system would have. So this would be, your wages, taxes, health insurance, retirement, all of this is rolled up into, on the summary budget here, this personnel number. The mileage reimbursement and company vehicle costs, again, that's all wrapped up in the summary budget under travel. So just making sure that you have this that matches exactly with your accounting system, even if it's not required by the grant. If the grant's only requiring you to submit this summary budget here, having this as backup so that you can share budget to actuals with your staff makes reporting much easier. That like wages and taxes are going to go to personnel, retirement, health insurance is going to go to fringe, that mileage, so you can map this to the summary budget when you're doing, like when you're requesting this, submit budget to actuals to the grantor in the summary function. It's very easy to pull numbers from the accounting system and plug those into the reporting requirements that are there. So how do you set up the accounting system so it's easier? So really what the accounting system needs to do for you is to be able to report the amount of revenue and expense over a given period of time during the grant. So there's a couple, and so what I'm really talking about is you're trying to divide the accounting system into swaths that are covering programs or grants. I think doing it by grant is a great way to do it. Like you can have overarching programs. What I've found is that if you're using too broad a swaths, there can be some double dipping. You could be like, have a program that umbrellas a couple different grants, and you could be double dipping. And if a grantor was ever come do like a grantor audit, or if you have an actual external audit, you could be using expenses 2 or 3 times as grant expenses under an umbrella like this. So there's a couple different methods. I prefer class or departments represent a grant. Now that's not always available to somebody that uses like Sage 100. I don't believe class or departments are available in that accounting system. So the alternative would be assigning GL codes to identify grants and projects, and then running GL specific reports that would do that. So I'll show, I have examples of these. So I'm just explaining it here, but I have, nuts and bolts examples coming up. There is also, in like QuickBooks or similar accounting systems, there's a customer function that can be used to to track grants. Kyle and I have gone back and forth on this one. She really likes this method. I don't mind it if it's already set up and running. I think it's great, and if an organization is in the habit of using customers to identify grants. I have a client actually that's their environmental client, and they use the customer function. It works, I think, but we're not going to review it today. It requires a bit more oversight to make sure that it's run correctly. And what I mean by that is the first two methods, the class or department or the GL coding methods, you're running organization-wide accounting report. So like an income statement or a balance sheet, but mostly an income statement. An income statement will show you every piece of revenue and expense that's happened under the timeline that you're asking the accounting system to report on. If you run just like a customer profit and loss or a customer statement of activity, it won't tell you it. Well, it'd be very difficult to, you have to go do a couple different steps to make sure that every expense has been identified correctly, or every expense has been identified, not necessarily correctly, but somebody hasn't forgot to tag or to identify an expense. Whereas if you're using the class system or the department system or even the GL system, it'll stick out like a sore thumb if something is not coded to a specific grant or class, or however you're bifurcating or like splitting up the expenses. So I think it can be useful. I think people can use it. It just takes a little more hands-onness, I guess, to ensure that it's being recorded correctly. Kyle, I don't want to totally badmouth the customer use of customers. So if you have anything to expand on it,
That's great. I think I think the important part with all of these is like they all have their plus and minuses, right? Like they all have advantages and disadvantages. And like I think the key really is to like pick one that works for you and your system and then use it, commit to it and use it, don't
stick with it,
go
right?
back and
Don't try to
forth.
use all
Yeah.
three,
Yeah, totally. Yeah.
Yeah, no, I think that's a great point. So here's an example then of how like a monthly report for using the class or department approach. So what happens here, and if you're using QuickBooks, this is really easy to set up in your organization. I mean, even if you're not using QuickBooks, if you're using any of the usual suspects, QuickBooks, Xero, any of the accounting, like I guess like for lack of a better word, the generic accounting software that's available at a low cost to nonprofits, this method is available to you. And it's very easy to set up. So you add classes. Here we have like an administrative class, a program called Fun with Numbers, and then a program called Apple Pie. And then we kind of have our revenue broken down by how I think it would kind of be broken down, and like difference between governmental and county grant revenue versus foundation grants versus donation versus like miscellaneous like interest income. Then we have kind of the expenses coming down there, and then coming across, you have it siloed out for the different programs or grants that you have coming underneath this. So the reason why I prefer this method especially for small or starting nonprofits, is it's very easy to run this report and share with your board, with your staff, with your, whoever, with the grantor. It's very easy to run these profit and losses by class over a certain amount of time and have an idea of where you sit within that grant. It's also very easy if there was an unclassed or an expense or a revenue that didn't have a class or department assigned with it, there would be another column that says unclassed or unclassified. And so it'd be very easy to see at a moment's notice if everything's been classified and you're ready to close the month and do the invoicing, or if that there's an expense hanging out that has a question around it. I think it's very easy to identify that just by running a report. The other option, and this is usually the option for Sage users or anybody with a larger kind of, I hate to say more robust, because I feel like they should have classes and departments too in those larger accounting softwares, but they don't. And the management is usually then done by general ledger account approach. So what that means is, if you look at our account numbers here, they're just 4-number account numbers. 5,000 has to be revenue, 7,000 and beyond is expenses. If you notice here, they have 3 digits extending after the first 4 numbers here. And what those 3 numbers represent is some kind of department code. So in Sage, in these larger like Mass 90, you can run general ledger like account reports that would report only like -0110, which would be the fun with numbers report. These are the same numbers that we saw over here. It's just that they're they're not split out across the side. They're split out, individually by the lagging 3 numbers there. So you would either have to set up reports to report those lagging department identifiers, or you would have to pull out the information into Excel and piece together yourself. It all depends on what the ability of your accounting system is, as far as the report side, that whether or not you need to pull it out to identify what it is, or if it's just easier for you to pull a complete statement of activity or a complete income statement and start rearranging it. So really what I'm trying to get at in these slides of how to report, or how to really silo your costs associated with your grants or with your programs, is so that it makes the reporting easier. It makes you, and I'm not just talking about reporting to a grantor, I'm talking about internal reporting as well, which is so important. The most robust and like agile nonprofits that I've seen share with their managers at least on a quarterly basis, but probably more likely on a monthly basis, budget to actual reports that shows program managers where they're at. And that's actually where we're going to first we're going to talk about allocation of expenses. Sorry, I added this part of the slide here. So how do we know which wages go into admin, which wages go into fun with numbers, which wages go into apple pie? How do we know, or how do we split those up? So it's called cost allocation. And essentially all it means is, how are you slicing the pie with somebody's salary, or with, say, I don't know, broadband internet expense that you have every month. It's known as allocation of expenses. And so really what it is expenses need to be earmarked or to be directed to a grant that they benefit. So there's really 3 types of expenses that you will find in a nonprofit. There's direct expense, and direct expense sounds and means the same thing. It's an expense that benefits one program or grant only. It doesn't, essentially affect any other part of the organization. So think of like program supplies, direct care staff wages, direct expenses that immediately affect one program. The next would be administrative or overhead expense. This is like the opposite of direct expense. So these are expenses that they're necessary for the operation of the organization, but they're not at all program related. So think of like marketing, marketing materials, say, or the HR department, although having a good running organization helps all programs, you can't really identify. Accounting is another one, right? The accounting work that goes in, it helps everybody equally, but it's really an administrative expense. And where you claw back this expense is through that admin allocation or through unrestricted donations. But they're going to add, if you have any kind of 990 reporting or grant reporting or audit reporting, you're going to have to split direct expenses with administrative or overhead expenses. And there's a third kind. It's a direct expense, but it's called a shared expense. And this is essentially a direct expense, but it benefits more than one program. So an example would be like PeerLink. If anybody's using PeerLink to, gather participant data, or you're using something else, it doesn't even necessarily need to be PeerLink. But if you're using a specialized software that collects participant data, but you're using it, you're charged $1,000 a month for it, but it's helping 5 different programs, then you need to allocate $200 per program because it's equally helping each one of those programs. So how, the other thing would be like program specific insurance, continuing education of staff. Say you have staff that work in 2 or 3 programs, you need to keep them certified or up to date on the latest peer support delivery techniques or any of that. So we need to make a decision on how you're going to split those shared costs. So there's a bunch of different methods to do so. And I haven't made an exhaustive list here of how to do it. I've just kind of listed the 3 most common ways that I've seen allocated shared expenses. So based on square footage, this would be like if you ran like a treatment center, for instance, and you had, 100 square feet for administration, you had another 300 square feet of bed space that you have for rehab services, and then you have another 200 square feet for meetings, AA meetings or NA meetings or something like that. So what you would do is you would take the total square foot, you would divide what percentage is admin, what percentage is bed space for recovery, what space is for AA or NA meetings, and then you would allocate the rent and probably utilities and probably anything associated with the building itself, repairs and maintenance. You would allocate those based on the square footage percentage use of those different expenses. There's also what's called time and effort. This is a technical term that's usually used by federal grants, but essentially what it means is what percentage of time did somebody spend on something? This is usually done through tracking like somebody's payroll hours. So, and then the estimation of usage. So you have choices here on how you allocate shared expenses. I think you should choose a method that's easiest for the organization to implement, but it also meets compliance. So if you have or want to have federal grants, I suggest allocating based on hours worked. And that can be, you can take, and even within there, you have wiggle room here. So you can take, and so what you want to do is have each person in the organization and how much time and effort they spent across the board, and then you take each one of their salaries and allocate it that way. If you try to blend everybody together, it's what's known as a blended rate, and you won't be able to use it for federal grants. You can probably use it for every other grants, but really you want to do salary or a payroll expense by person. It makes it a little more onerous, but you're in compliance with federal grants. But you can also estimate people's time and effort. So you don't necessarily need to reinvent the wheel every month and find out exactly to the minute how much percentage of somebody's time was used. You can take an average over the last year of how much that person spent in each one of the programs or grants and use that percentage to allocate their wages on a one-to-one basis. So the big thing is, and I want to stress this really, is make sure that your allocation methods for expenses are written down in your fiscal manual, and you should all have fiscal manuals that essentially explain why you're doing something, how you're doing it, and it makes transition much easier. It also makes it when you apply for grants, especially federal grants, they'll usually want to see your fiscal manual. So making sure that this stuff is written down somewhere on how you do it and why you do it also helps in training. If you have written backup, not only are you showing somebody if you're bringing in a new accountant or somebody to do the allocations, that it's transparent as how that's being done. The other thing is you can share and talk with your grant liaison or grant contact to make sure that the way you're allocating expenses is following grant acceptable by the grant. It's much easier to double check up front than it is to ask for forgiveness later. I know it's usually the opposite in life, but realistically with grants, you want to make sure that the way that you're I hate to use the word bifurcating because it sounds so, but the way that you're separating expenses across programs jives with what they're allowing. So just making sure that that stuff is written down. We'll run through really quick I don't want to really run through really quick, but dealing with restricted grants. So under accounting rules, grants with donor restrictions, they're to be recorded. We talked about before, like recording them right when you receive. This goes to Shanti's question. So unless there's a condition that prevents it. So using an example, if you get an unconditional grant and it's issued that supports a program for 3 years at $10,000 a year, so you have $30,000 and you're supposed to recognize this $30,000 all at once. And so what this can mean is, and I've seen this, is it can make it seem that this program is super profitable in 1 year. And then if you leave it in gap, it looks like you're losing money on that program for the next 2. Especially if you have a board that you're reporting to, they're going to be like, oh my gosh, we have all this money, let's spend it. And you have to remind them this money needs to last 2 or 3 years. Let's slow our jets. This is a restricted grant. So how do you present that in the accounting system that to make this clear to either board, staff, even the external grantors, that you're not just flush with cash, you actually have restricted grants that need to be used over a period of time. So unfortunately, there's no easy way to do this. You can't, I guess you could try to do it in the accounting system, but essentially, if you've ever worked with deferred revenue in the real world, now there is actual deferred revenue in nonprofits, but what we're doing here is we're using deferred revenue accounts to make managing restricted grants easier by recognizing the revenue or recording the revenue in the accounting system as restrictions are satisfied. So I want to make it clear that this is a departure from like the accounting rules, but it's very easy to adjust at year end if you have to be audited or to submit to an agency that requires you to be within the proper accounting rules. But essentially, we'll go into an example of this, but tracking using an Excel sheet, it should be utilized regardless if you're using the deferred method or not. So this is going to be an external kind of method or scheme to be able to track where your restricted grants are. So here's a balance sheet. And if you look down midway through here at 4250 and 4251, we have deferred revenue, which is actually restricted revenue for 2 grants over the 2 years here. So if you notice, 4251 is deferred revenue for the Square Root grant, and that was used up during the fiscal year 21-22. At the end of fiscal year 22, you have deferred revenue for a Little Debbie grant. So at the bottom, it has the net assets with and without restrictions. So a little bit of detail on how this works. When this deferred revenue for the Square Root grant, when the restrictions were recognized, you were able to release it. And I have a tracking example of how that would look in your Excel sheet. So you have the 2 different grants here. You have the award date. You have the why it's restricted. One's restricted for timing and purpose. One's just for purpose. You have a beginning balance at July 1st, 2021. You have any additions to the grant. You have any releases from the grant, and then you have a balance ending here that's on the deferred revenue portion. So these releases here are based on expenses for the apple pie program that would be pulled from a program profit and loss. So to release it means that you've spent the money, you've met the restrictions that were in place, and you're able to release the money out of out of restriction. It's now unrestricted because you've made the associated expenses with it. I know this can be like difficult to like wrap our heads around. This is some, even like people that have been in accounting for a while, if they haven't dealt with nonprofits before, this can be very difficult to kind of understand it because it doesn't make intuitive sense. Like we talked about, like, hey, you get $500,000 up front, you're really supposed to recognize it all in one swath. It can be difficult to understand this. So don't feel bad if this seems super foreign. I mean, it always, even when I explain it, I'm like, am I making sense in trying to convey what we're getting across here? So if you have questions on this, please like send me emails or get in touch with me, some way that we can talk about it or how to manage restricted grants, because we could do a whole we could do a whole presentation just on this. I feel like, because it is such an in-depth kind of thing, but I want to make sure that we cover it. At least you guys have like a flavor of how to manage it. It's not unmanageable. And I think people can understand it. It maybe just takes a couple times of seeing it for it to really dig in. So, I know we're at 11. I think, do we have until 11:30? Is that right? Or, Oh, okay, good. I don't want to rush through the rest of this because the rest of this is important part of
Does
it.
anybody have any questions, just as there's a little bit of a break in the presentation?
So I have a quick question. So you had mentioned basically you still have to track it using Excel, which is what I do. One of my thoughts was, would it make sense to use QuickBooks or a free software to track those? Would that help me make it easier? Because
Remind me, Shanti, are you the one that's in Sage 100?
yeah, and we have tons of programs and tons of grants. So
Sure.
we use sub GLs to,
Right.
we're doing all of this, but I have a lot of spreadsheets to manage.
I wish I had a good answer for you. I wish it was just as easy as like turning on, like a version of QuickBooks and you tracking the restricted software. I'll be honest, I've looked for budgeting software, nonprofit specific, to try to see if there's like anything out there that would track this stuff. And I've come up short. I've even gone to software developers myself and said, hey, listen, you want to make $1 million, or $1 billion, like, here's what you need to do for the nonprofit sector. And you could charge them good money, because I have yet to find a scheme or a program or a budgeting piece of software that can track the restricted money, the release of restrictions like this outside of a Excel an Excel sheet.
Maybe we should get together and build some software.
Yeah, maybe we're in the wrong. Get my number, we'll do it.
All right. So at least I'm not, on the wrong track here. I just
not at all.
Too many spreadsheets.
Yeah, and I think
and we get audited, so it is important to.
Yeah, and auditors love to see this stuff. When you show them, here's my releases based on my GL accounts for this. They're like, great. I think one of the things that I try to get all my clients to do is like, I call it like a cheat sheet or a lead sheet, or like I guess like a table of contents for your grants. And you list kind of like this, right? You list your grants, where you can find the grant document, how you view the grant. Like, is it like a cost reimbursement grant? Is it a traditional grant? Is it a fee for service arrangement? And then you have, and it kind of lists all that stuff out. And so I don't know if there's any, I wish I had a better answer for you.
Okay. I have that with detailed TDEL expenses for each grant, and then a revenue recognition tab that rolls it up. So
yeah. And I think and to go back to this deferred revenue tracking, to be clear, when this amount here during 2022 was released, it then goes into revenue. So that like you're recognizing revenue at the same time, that it's being like released. And so I think it makes it easier for staff and for boards to see that, although it's not GAAP. So you have to make a GAAP adjustment if you're getting audited to be like, So if you have like a lot of these, it may be worth just biting the bullet and reporting it the way GAAP wants you to. And then on the back end, doing the deferred revenue thing outside of the accounting system to present it on more of like a cash basis. But yeah, it's one part where me and the accounting code butt heads because I think it doesn't make much sense, but that's the way they do it. All right. We'll move on here. If anybody else has any questions, jump in whenever. Budget versus actuals. It's one of the things, the most successful nonprofits that I've worked with do these on a very regular basis with their program staff. They can be required, they're often required by the grantors to be done monthly, quarterly, annually. But even if the grant doesn't require them, or you don't have any grants that require them, I think this is super important to a step that part of like the accounting function of a nonprofit. I cannot stress enough how much this matters, and it does a lot of things. It ensures that like your program staff has the autonomy and really like you're giving them the tools to be able to spend as much as possible on their grants. It also can like throw up red flags if you have a program manager or a program that's just way ahead of budget as far as spending. It gives you a chance to go back to the grantor and ask for more money, or lets that program staff know, hey, you got to put the brakes on the spending here. You know what I mean? Like, you have been spending too much money. We're going to be over budget at the end of this. And like it just, I think it give often in the organizations that I see that don't do these budget to actual reports, and it creates like an unknown with the program staff. I don't know how I'm doing. I don't know if I should spend more money. I don't know if I can. And you get a lot of small questions like, can I buy pizza for my peers? Can I buy, you know what I mean? Like, can I continue, can I double the engagement I want to do this month? And it creates like this unknown for what they're allowed to do. So the key takeaway here, though, is that this is really easy to accomplish if your budgets match your accounting system. If it doesn't, you're going to spend a lot of time curating these at the end of every month or quarter. So that's why I harped in the beginning about your budgets, your budgets matching your GL coding or the way that your expenses are laid out in the accounting system. So what does one of these things look like? So here is a budget to actual for the fund numbers learning example that we have. And at least this is the way that I would set it up. What's missing here is we have a dollar amount variance. Usually I would have like a percentage on top of it. But for space here, I've left that out. But just know that, the first one is what was budgeted for that, length of time. The actual is what actually happened. And then the variance on the right is kind of the difference, like, so you had $50 more in wages. Somebody could have worked, like 4 or 5 more hours or whatever it is, or 2 more hours. Sorry. People are well paid. Like, so $25 an hour, they could have worked 2 more hours. Taxes, seems like we were right on there. Benefits, was not too far off. Professional fees, we overspent. That's what that negative means there. We overspent $50. But if we come down to the end, this grant, if you look at the totals there, this grant was probably pretty well spent, only $142 off. That's not way off here. So this is an example of how you would do it. Let's talk QuickBooks again. QuickBooks allows you to put budgets in by class, but you have to do it one class at a time, and you have to do it by hand, unfortunately, unless Kyle has found a workaround on this, but there is none, and it drives me crazy because you can you can import an entire budget for the entire organization through Excel. But if you're trying to import or put in budgets by class, you have to do one line item at a time and class by class. So if you have more than like a dozen grants, this can take you quite a bit of time to do this. I usually suggest that if you have your budgets standardized, it's really easy to do it outside of QuickBooks to put these together. And that's usually the way that I do it, to be honest. Unless I want to, I mean, it's like you either bite the bullet and do it all at the beginning of the fiscal year and you put in the budgets by class and you spend a lot of time doing that, and then you're able just to push a button in your accounting system and report budgets to actuals, or you just kind of space out the pain and you do it monthly by, just cutting and pasting into the budget to actual templates that you have. But again, I want to really harp on the fact that like this is so much easier if your budgets match your accounting system. Some of the most work I've spent working with nonprofits is when their budgets don't match the accounting system and you're trying to figure out what part of the expenses makes up supplies, what part of the, what are they considering payroll versus, like where does all this fit in? So trying to merge expenses and figure out if you're on budget or not when you're reporting, it's much easier when you do it, when they match 1-to-1. Grant disbursements, how you get paid. So we talked a little bit about this, like monthly, quarterly invoicing for funds, drawdowns, lump sum given. So the thing that I really want to harp on though, and when we talk about grant disbursements, especially in the cost reimbursement types of grant, you need to factor in the payment schedule to ensure that that the cash flow of the nonprofit isn't being cut off. So, like if you're starting a new program or a new grant that's going to require that you hire 20 people and it's a cost reimbursement grant, that's a lot of money going out the door before you can ever invoice for it. So is that going to put you in a cash shortfall? If it is, and the grantor, and you're working closely with the grantor, even if it is a cost reimbursement grant, ask for some money up front to bridge that gap of hiring 20 people. It can be very difficult. And if you're running mostly cost reimbursement grants, it can be very difficult for you to spin up a larger program because you're having to put out payroll, health insurance, training materials, new computers, onboarding costs that it's going to cost extra HR time, all this stuff that I don't think a lot of us think about when we implement a new grant or a new program, is these upfront startup costs. The analogy in for-profit is like, if you're going to expand business, you're going to have to pay you got to make money you got to spend money to make money, is what they always say in business. And really what that means is you have to put a bunch of expenses out before you can ever see or reap the benefits of that coming back. The same thing is true in grant management and in nonprofits. There's a large price to pay to bringing on new, 20 new employees to be able to expand services. So just being aware of that, and then being aware of specific requirements for payment. So if you have one of those conditional grants that requires matching, often before you can get your final payment or before they'll roll forward into that next year of funding, you have to show and prove to them that you've received those matching funds. Or if you have specific invoice templates that you need to report. I currently have a client that's was a little late getting their budgets in to Joe's, the Joint Office of Homeless Services with Portland, and it's taken them about 2 or 3 months. We have outstanding about 3 or 4 months worth of billings that we're unable to submit because it has to be in their invoice template. And so we're waiting, and it stinks, Now, luckily this nonprofit's large enough that they can weather a couple months of this, but it's getting to the point where there's enough money outstanding that we really need that budget to be approved, and we need to get that invoice in. So
it always takes the county a while to pay.
Always. Always, right?
Always.
It's almost like they just wait, until you're ready to fire off an angry email, and then, oh yeah, payment's on the way.
Yep.
But yeah, I mean, I've had some counties, they've been, the thing with counties they're not going to let you know if the invoice template is wrong. They're just not going to pay it because they saw it was flagged for something, and you have to go inquire yourself. I shouldn't say that always. If there's anybody from the counties listening, like, we love you, we love working with you, but sometimes there's a lack of communication on why something hasn't been paid or where it's at, and it's no fault of any one person. It just gets held up somewhere administratively. And so, yeah. So just, I go back to like the relationship portion. If you have somebody you can call and be like, sweet talk them as to where's my invoice payment, it
Absolutely.
really helps. It's one of those things, if you can just be nice, it pays off most of the time. So reporting, this is a big one. If you followed all my advice before this, reporting should be a breeze. But one of the things that we haven't talked about is program specific. So really this gets into the financial reporting, but I also want to talk about like participant reporting. So making this easier. So there's usually, when we talk about grant reporting, there's usually a financial component where you need to report the financial results of what you did, but there also needs to be like some kind of like narrative report, usually done by the program managers. And that's usually like, how many people did you serve? What were some lessons you learned? What, if you could do this all over again, what would you do differently? All that kind of stuff. So you usually want to tee those up at the same time, and having that stuff on like a recurring calendar invite or something like that. Making sure that you can coordinate with program staff to make sure that they've done the narrative portion and you've done your financial portion so that it can go in together. And then being able to condense, what's this part? I haven't done this one. Most agencies have designated person assigned. And being able to understand when those reports are due. So there's a couple of different types of reportings. There's the grant milestone report, usually narrative, what we just talked about, the who, what, when, where, why of what you've done. And then, and this is usually required by both federal, private foundations, state and local. Usually grant milestones or results of the grant funding is required. There's another one that if you have federal funds that you have to report. So if you have direct federal funds from, say, like SAMHSA or any of the other like, big governmental agencies, they'll ask you to do what's known as FFR, federal funding reports. And so they're submitted usually quarterly, yearly, and at grant closeout. And they're one that you cannot miss. If you miss them, not only will you get a slap on the hand and get your like funding shut or payments shut off, but you'll also get a ding on your single audit or by your audit if you don't timely submit these things. So making sure that you're up on the federal funding reports. The other thing is I don't know what's going on, but sometimes you're required to do these quarterly, and then all of a sudden the agency that you're contracted with just decides we don't want to look at them quarterly and we're going to do it yearly now, but they don't tell anybody. So you log in to do your quarterly report and it's not there, and you're like emailing your liaison, where is this? HRSA just did this to me. HRSA, if you're listening, we love you, but can you please just make us aware that you don't
I
have
think I noticed that too. FFRs, there's no quarterly ones.
It's like, what's going on? So and then you try to contact somebody and they're like, well, we can't tell you when to submit your, you can tell me if I have to or not. But so anyway, you have to usually do some digging to figure out, oh, they turned off the quarterly reports. Okay, now we only have to do it yearly. But yeah. So it's, and then depending on which agency you're contracted with depends on where you sign in. So it can be a messy like quagmire of different internet sites that you have to log on to and understand. Like DOL has a different reporting login than HRSA, than SAMHSA. And so again, if you have a good grant person you can talk to, or if you're really reading those grant documents to understand what those reporting requirements are, it makes a big difference. And then there's usually like some kind of specific requirements for a grant. So we talked earlier about PureLink. I know that PureLink is really in vogue right now for reporting like who you're serving in these like peer delivered service kind of in these recovery type programs and grants. That PureLink is a big one. But there might be other ones, right? And they may not require PureLink. PureLink makes it, I think, pretty easy to report the number, the type, and all that stuff of people that you've served. But who knows? You might have to keep, your program staff might have to keep like I've seen in the past where they keep Excel sheets or, like manual records of who they've made contact with. oh, the other thing that's in vogue lately too that I should mention are counties are giving what's known as like flex funds or peer recipient needs. Essentially, it's a pile of cash that's covering expenses that aren't under the grant. I mean, I know that sounds weird, but things like a coffee, usually like food and drink is out of the question for federal funds, and usually it's out of the question for like county funds. But recently, like, and when I say recently, in the last like 2 or 3 years, counties have been made available, like say like $7,500 to buy for peer engagement, like buying coffees. Like if somebody's gonna take off from rehab, like they'll allow you to give them a cigarette, stuff that's usually like not allowed in grants, like tobacco or coffees or like a sandwich or paying for somebody's like storage unit so they don't have a stressor that causes them to relapse. They have these flex funds or like cash available for nonprofits to use as they see fit. But to use those funds, you need to record what you're spending it on. Like, hey, I paid Mary Joe's, storage unit. I bought, Sam work boots so he could, like get a new job in construction, or I, gave this guy a cigarette, or I bought a pack of cigarettes as I was going out on the street to interact with people as an interaction tool. So, but you need to report those. They need to be written down. So making sure that you have that stuff to be able to submit that so that, funding doesn't get cut off, but you have the proper reporting requirements there. So let's talk common mistakes that I've seen in my career. During the proposal process, it's usually not clearly stating what they want to do, not, really showing them how you're going to complete it, rushing to complete, and then not involving other departments. That's a big one. I hate to harp on it, but sound like too kumbaya about organizations, but everybody really needs to work together, and it makes a huge difference if you're including other departments in when you're contracting, and having everybody on the same page where you're working as a team as opposed to these parts being siloed. It's not just accounting departments requirements to manage budgets and all that. It's not just program staff. And it's not even just the grant writer's responsibility to write these grants. It's got to be collaborative and allowing everybody to speak freely and have some kind of input on how this stuff is being done is huge. So that's during the proposal process. During the management process, I can't stress enough reading the grants and understanding them. I know they're usually seem like they're written in a foreign language, but connecting with somebody. So resources for being able to understand or have somebody read your grants for you. CPA that does your audit would love to hear from you before they have to give you a ding because you misread a grant. So, sending them a quick email like, hey, I got this new grant. This is how I'm reading it. I think it's fee for service. I don't think it's federal funds. I think, whatever. I don't see a CFDA number, so I'm not considering this federal, So CPA that does your audit's a good one. Grantor is another good one to go back and ask questions. Hey, like, am I reading this correctly? Am I looking at this the right way? Is another one. An organization like this one, that has consultants that might be able to help you if you're really, because I've read some grants and they say one thing on the cover sheet and you get through that and then you look at the budget and it's something completely different. And even as I'm reading, I'm like, this doesn't even make any sense. It sounds like a traditional grant or a reimbursement grant, but I get to the budget and it's a fee for service arrangement. So I write the grantor, hey, can you clear this up for me? How are you considering this grant? And then we're both on the same page and you get it in writing and you can share that with your auditor or your accountant. Or if that person leaves and a new person comes in and they start yelling at you, hey, I have confirmation here in an email from the last guy that said, this is the way it is. So, really being able to maintain proper documentation, a relationship with that grant manager, understanding the terms, the directions, everything that's included in this grant. But yeah, reading and understanding of a grant application and sticking a flag in how it's going to be run or how you see it and getting confirmation of that is great. So, Other things to think about, I mean, really take this on a grant by grant basis. Every grant is, I've seen an organization have 4 or 5 different grants from the same federal agency, and they were all different. They were different in many different ways. So don't just assume that it's because it's the same funding source, the same federal agency, the same state or local agency. They can all be different, and the requirements around them are different. The accounting treatment can be different. I probably, you guys think I sound like a broken record here, but make sure everybody's involved in delivery of grant and the contract is aware of what's allowable and unallowable. We can't blame contract staff if they're buying people cigarettes and beers, or not beers, but cigarettes and food, and it's not allowed in the grant, and we didn't make them aware of that, so understanding what allowable and unallowable costs are under a grant is big, so that your staff has the the ability to be able to deliver these in a way that's not going to invalidate the grant. And then we talk about process, implementing a process to monitor this, so that you don't get caught flat-footed or surprised when it comes to an audit, when it comes to a grantor review, or it comes to the end of the grant and you have some kind of reporting requirement and you get flat-footed. So, milestones, budget to actual views on a regular basis, making sure that you know where matching funds are coming from, or if you need outside services, what's allowed, what's unallowed in a grant. It just makes a huge difference. So I think I got it in under time. If everybody has, I know we are asking questions along the way, but if anybody has questions, I'd love to hear anybody's questions or concerns, or if there's something I would love if somebody had a burning question that they came in with and I wasn't able to cover it in the presentation. I'd love to hear that too. And Tara can make, for anybody that's here that needs my information, I can make my email available. So if anybody has a question that they don't feel comfortable asking here, please feel free to email me at your leisure and in confidentiality, and we can talk about it. But
Wow. That was amazing. Thank you
good.
so much. I'm gonna stop. Wait, where did the recording go? Uh-oh. I know I'm recording because it's showing it, but it's not letting me stop. Oh, here it is. Sorry.